did there was help each of these professors with their areas of interest in finance, like I said, in technology and entrepreneurship. And I really started seeing my passion developing at the intersection of these three things, right? Finance, technology, and entrepreneurship. So where does this lead is what I started questioning. Fortunately, what happened to me during that time was one of the top employers in the state of Massachusetts, which was a huge mutual fund company called Fidelity Investments. How many people have you heard of Fidelity Investments? Okay. So it is a huge company. It manages about $1.3 trillion. It's something like your, say, ICICI mutual fund, something like that, but again, it is huge. I was part of a small division there, which was very exciting and provided almost like a startup feel while I was going through my entrepreneurship area there. Internship. And then coming out of my MBA, I was offered an opportunity to join Fidelity Investments asset management division. Asset management is all about sort of looking at sort of various companies to invest in across the world, right? That's what we did. We managed about $35 billion. We grew to about $55 billion during that time, 3 years while I was there. And sort of I was helping a group of about, say, 20 people trying to invest all over the world. So learned a lot in terms of what it means to investing in companies, right? So it's very sort of going through deep research, talking to the management, understanding macro trends. What are the various sort of trends that are happening in industries? Why are certain countries better than the others at that point in time? There's a lot to be learned in that space. So went through that particular curve, like I said, for about 3 years. And then what I started understanding was my passion started getting a little more focused and more focused. Essentially, that's what happens with a little bit of more experience, I guess. So very early into that career, I thought instead of my passion being at the intersection of finance, technology, and sort of entrepreneurship, it was more at the intersection of markets and technology. By markets, I mean financial markets, right? Like stock markets and sort of equity markets and so on and so forth. I'll talk a little bit more about that. Please, like I said, please stop and ask any questions because there's nothing like a silly question. So coming out of that, I thought I had a great view in that intersection of, say, markets and technology into how Fidelity solves problems. What was missing was, for me at least, how does the rest of the world look at it? So Fidelity had it's a 100-year-old organization, very rich in terms of culture, and had a very sort of a view in terms of how to go about things. But the rest of Wall Street didn't operate that way. I knew that by research, but I wanted to experience that firsthand. And what I thought was getting into one of the Wall Street companies, like from Goldman Sachs, Deutsche Bank, whatnot, would have sort of limited me to get that experience only in that particular industry, in only that particular sort of company. So I thought of joining a consulting firm like McKinsey or Deloitte. Fortunately, I got into Deloitte. How many of you have heard of Deloitte here? Okay. So Deloitte has about 180,000 professionals all over the world, and they do everything, right? They do everything from, say, helping. It's basically a professional services company, which means that it's something like Infosys, it's something like Wipro, it's something like other companies that you may have probably heard of, but it is less in terms of technology, more in terms of business and finance and all. Right? So they have like 5 different divisions, from financial advisory to strategy and operations advisory to sort of accounting and so on and so forth. That is essentially what strategy consulting is all about, solving strategic problems for businesses in whatever problems they do have. So just give you an example of what we did for a big UK bank. We did some M&A. How many of you have heard of M&A? Mergers and acquisitions. Okay. So mergers and acquisitions essentially is about companies grow in multiple ways, right? Companies can sort of grow organically, which means that they can, whatever money they make, they put it back into business and then keep on growing incrementally, keep on growing and growing and growing and growing. A lot of businesses in India have grown that way. So companies also grow by inorganic methods. By inorganic, I mean things that are not sort of fundamental to the company's core business. And one part of that is mergers and acquisitions. So you've recently heard of Flipkart acquiring Myntra. right? So why did they acquire Myntra? The reason is because Myntra has already captured a decent amount of share in a particular fast-growing market, which is fashion in India, right? I mean, it is a very sort of a lucrative thing. It made perfect sense to be acquiring sort of Myntra, and they did it. And right now, it is like, you know, it sounds like it has been a good acquisition today. Let's see what the future holds. But that is what M&A is all about: mergers and acquisitions. Mergers and acquisitions can happen either for strategic reasons or for sort of you know, very straightforward reasons. For example, if a market is as big as, say, $1 billion, or say, I'm just going to use it in terms, if it's a 1,000 crore market, okay? Now suppose, for instance, let's argue that the plywood industry is about 1,000 crore business in India. Right? So that is the amount of transactions that happen in a particular year, yeah, for buying and selling plywood. Right? So that is a 1,000 crore market. In 1,000 crore market, now suppose you are number 5 in the market. Right? So that means you have 4 people ahead of you and sort of a long tail of other people behind you. How do you want to go from, say, number 5 to, say, number 3 or even number 1? You can do it bunch of ways. Well, you can accelerate, you can double the production line, you can do this thing, find more market, go to a lot of things that you can do. At the same time, a quicker and meaner and faster way to, and efficient way to do it is actually going and acquiring some other companies. Because the consolidated sort of footprint gives you an even better sort of a leap to get into the other areas. For instance, I can acquire, so if we are at companies number 5 in the market, we can acquire number 6, number 7 and number 8. And together, because we have acquired 3 other companies, we are actually number 2 now. Right? So that is what mergers and acquisitions are all about. And it happens for strategic reasons as well. Like for instance, the example we just took in terms of Flipkart and Myntra. Flipkart was never trading fashion, didn't have a fashion vertical, but they acquired Myntra to sort of add on to that. And they kept that brand really separate, right? So it makes perfect sense to be able to do that. So that's what we did as part of Deloitte as well for about 2 years. And then coming out of Deloitte for 2 years, there was this burning desire internally for me to start something which I thought I wanted to spend the rest of my life with. So the Deloitte track was very straightforward. Keep on working hard, keep on working smart, keep on sort of networking a lot. Eventually you get into a partnership track where you become a partner in the company. Very straightforward. I mean, it is extremely difficult to do that, but it is straightforward in the sense from what you need to do. So I didn't think that I wanted to really do that. I thought there was more to explore in life and career and whatnot. And fundamentally, I thought the kind of problems that I wanted to solve for the rest of my life, and which I wanted to call my own, was not something that I had to do with what I had experienced already. So what came about was 3 people who had never started a company got together, myself included. All smart people, I would say. I would probably in the last of those 3. But the 2 other people who I joined forces with to start my first company, very smart people. One of them went to Harvard Business School, the other one went to Duke University. One of them worked for an $8 billion hedge fund in the US. The other one was part of a huge bank and did risk management there. So and you know, I just talked about my particular background. So the 3 of us came together to start a hedge fund. How many people here know what a hedge fund is? How many people have heard of something called as hedge fund? So coming out of the hedge fund, so we formed a company. It was essentially a hedge fund. Essentially, going back to what a mutual fund is. So if you have about 100 rupees and you want to invest that somewhere, you have multiple options. Now, if you suppose you want to go and buy Infosys stock, right? You can do it in 2 ways, right? You can go and buy Infosys stock directly via your ICICI or whatever accounts that you have. Your banker should be able to tell you how to go about that. Or you can invest in certain funds where the whole purpose of someone actually running that particular fund is to find the next big stock. For instance, there are like so many other kinds, Kotak and ICS and all these things, right? I'm not recommending one over the other. I'm just saying that there are a bunch of options out there. So a mutual fund, essentially the entire business of a mutual fund or manager of a mutual fund, the portfolio manager as I say, is to find the lucrative companies for you to invest in. And he's doing that day in and day out. So he's a professional doing that. You are not a professional doing that unless you are a mutual fund manager yourself. It makes more sense to give your money in the hands of professionals who are actually managing money. That's what mutual funds are all about. So the company that I worked for, Fidelity Investments, was the world's biggest mutual fund company. There were a couple of other things. Since then, I'm not sure if they're still number one or number two, but they're still in the top, say, I would say three. And so that is a mutual fund. Now, a hedge fund is a little different from mutual fund in the sense that it is, think of the analogy that I can use is an MNC and a startup. And an MNC is like this huge corporate structure, very well-defined processes. But over a period of time, it becomes very hard for a company that has massive amount of scale, of number of people, to keep innovating very rapidly. Right? That's when startups come into the picture. So, and I'll talk a little bit about our startup that we have started here in India as well. But a startup is essentially that sees an opportunity and goes after it sort of in a very quick manner. Right? Speed, accuracy, and sort of being able to churn things very quickly is what startups are all about. And then there are both companies. One is a smaller company, one is a more established, larger. That's the analogy that I would use to sort of even think very simplistic terms to draw a similar sort of a view for mutual funds and hedge funds. Hedge funds are smaller companies. They manage little less capital than sort of the larger companies, and essentially they have a very defined way of what they're going to go and about investing. So that is what it is. We started a hedge fund. Our strategy was to see what are the similar companies that do a lot of work and do very similar work between the US and India. Right? So that, for instance, I'll give you an example. There is Nestle. You've heard of Nestle? Yes. So there's Nestle that is listed in the US, there's a Nestle that is listed in India as well. Right? So if you can study the US market, you can understand how the Indian market is going to go for certain companies. So we saw a huge sort of correlation between companies listed in the US and also in India. That's number one. Number two that we saw was, if you look at all the services companies in India, right, Infosys and Wipro and whatnot, about 50% plus of their revenues actually comes from the US and some of the other developed markets there. So if you have a good view into how US does things, you can predict almost how these guys are going to do the economy to move forward. And for a longest time, the markets were, the human potential was there. The companies in the market was getting more and more stronger, but sort of what was missing was the stability in the government, right? Every time we look into the papers, there was nothing but sort of corruption things out there. And sort of that was giving a lot of angst to people sort of outside of India who are looking at India in a very favorable way. That they're like, it just doesn't work that way. But then this new sort of government has formed with a very clear mandate. The people of India have stood up and actually said that, hey, we want to be able to actually form one government at the center that can actually govern the nation over a period of time. There is, I don't mean to sound, sort of a fan of any political party, because I'm not. I don't think I consider myself in that way. But at least having a clear majority and being able to drive a certain agenda at a national level helps the markets to stabilize itself. Because in terms of sort of how the markets work also, it is, I would say it's about 80-20%, 70-30%, whatever it is. Only about 20% is actually raw human intelligence. The other 80%, I would say, is all herd mentality. I'm going to put money here because somebody else is putting money here. I'm going to not put money here. I'm not going to invest in this company. This company is going to fail because somebody has said that a company is going to fail. Right? So there's a lot of sort of perception to markets as well. I mean, the perception itself is negative, right? Because the government is not working well, and the entire economy goes into a sort of a different sort of way altogether. But that has started changing. People have started talking about India in a different way. The three levers, as I mentioned earlier, sort of have started working a little bit better now. That's why you see a lot of money again coming back to India. Like just in last year, 2014, right? $2 billion, which is about 12,000 crores, was pumped into early stage companies that are completely private, not even public. Right? If you look at the amount of money that went into public markets, that's a different figure altogether. It's huge. But these are the kind of things that have started happening. So, yeah, so that's where sort of, I mean, we went into tangents and started speaking about a lot of learnings or of my experience. But that's where sort of we saw the opportunity. My co-founders and sort of I saw the opportunity, seeing that India is going to fundamentally shift in a few years' time. We started a company 3 years ago with a view to understand where is e-commerce and commerce in general headed, where is business in general headed. And with there is a lot of things that have changed fundamentally from, say, now to what Amazon did about 20, 25 years ago. I want to talk a little bit about e-commerce and sort of, because that's where I live and breathe these days in terms of my area. So if you look at sort of, again, some of this is repetition for some of you that who will probably hear me tomorrow. If you look at sort of what Amazon did, right? Amazon was 20, 25 years ago, they were in the US. They started a company called, Jeff Bezos started a company called Amazon with a view to say, let's bring everything that happens in the physical world also online, right? And he started selling books, just books, quite a few number of times. And then he started adding a lot of other sort of categories. And then it opened up to become a marketplace. So Amazon is actually a bazaar, it is not really a shop, right? You and I, if you had sort of retail, you wanted to sell your stuff on Amazon, you have the ability to go to Amazon.in and actually sell your stuff on Amazon.in. It's actually a marketplace. So what are the kind of marketplaces that actually happen offline, right? So there are malls, right? Malls are also like marketplaces. There are bazaars. There are exhibition houses. A marketplace is nothing but buyers and sellers coming together to make transactions happen, right? So that is what sort of the platform is, what the Flipkart, the Amazon, and even now Snapdeal provide. They're actually marketplaces. So what we thought was, we are in the third leg of commerce as an evolution. Right? If you think about going back to the Manmohan Singh era, the commerce part, so India has traditionally been very mom and shop, brick and mortar, that kind of businesses, right? A lot of people actually are retail oriented, and it's over a period of time, India is one of the most complex markets there is to India in the world, no doubt about it. Why? Because every state has its own nuances. Forget about taxation, taxation and all that. But the culture is also very different. So what may sell in Gujarat is not necessarily what may sell in Tamil Nadu, right? So being able to crack this market at a very national level is very different, though we have the power of volume. So what we thought was, India is going through a massive interesting story. The world in terms of e-commerce is changing. A lot of interest has come now at the likes of Amazon and Flipkart and Snapdeal coming and raising a lot of money and being transactions happening. With 0%, retail is now somewhere between, e-tail is about say 2 to 3%, right? In terms of just the amount of money that is exchanged, transactions that happen, right? So it's a very interesting space. So how about providing technology for anybody to do e-commerce? Why should it be limited to 1 or 2 or 3 people, right? Why can't everybody do e-commerce? That is how we started thinking about it 3 years ago. And India, if you think about it, has traditionally been a very commerce-oriented or a trading-oriented community. I'll give you an example. So if you look at sort of the US, the amount of, if you are doing business in say Chicago, it's not very different from doing business in New York, in the sense that it is like access to markets is easy, right? So what started happening a few years ago was people started asking, wanted to get more faster, better, cheaper, and processes getting more efficient. So that led to the germination of, I would think, in my humble opinion, almost Silicon Valley, right? There was a company called Fairfield Semiconductors. They started the semiconductor revolution, and that company broke out, and essentially the new age Silicon Valley was born. Some people that were actually who founded Intel were part of that prior company I just named. So Silicon Valley was born with a movement of how to get things more efficient, using sort of integrated circuit, a lot of these technologies to make sort of decision making even more simpler. But India is diametrically opposite. It is a very trader-driven community, right? It is not about getting things cheaper, faster, better, process things. It's about getting access to market. Like if I am sitting here in Belgaum and I'm having a factory that manufactures from, I don't know, from helmets to cement or whatnot, one of the things that I've been thinking about for the last 20 years if I was running that business is, how do I get my stuff from here to Arunachal Pradesh? Right? Distribution was the name of the game. Getting access to all these markets was the name of the game. And that led to a lot of layers in the distribution. So I'm a manufacturer, it led to sort of distributors, super distributors, resellers, wholesalers, and then retailers and then consumers. Right? This distribution chain started getting longer and longer depending on how far geographically or distant from the manufacturing plant. So access to markets was the prima facie of the entire market. So what e-commerce did was it actually broke that law. It came in and said, I'm going to go directly to market. So Flipkart stores stuff and whatnot and connects people and helps people trade from one thing to another, and they take care of the entire logistics and stuff like that. So that is sort of how I would think. So what is the reason I was talking about Silicon Valley is about what is semiconductor technology to the Silicon Valley in the US. I think that's what e-commerce is to, say, India. Right? On the back of e-commerce, almost a lot of other business models have started. So a new strategic channel has opened up, and people have started using that channel. So for Flipkart, for instance, I think about 60 to 70% of the traffic comes via mobile, which is amazing, right? Everybody has these days a computer in their pocket, which was unlike the case that was about 20, 30 years ago. So mobile has changed a lot of things. Number two, processing information has become a little more cheaper with cloud technology. How many people have heard of cloud technology? Okay, so cloud technology is nothing but basically being able to do your processing and computing and storing of data and whatnot. You don't need your own servers. You don't need your racks of servers and whatnot. It happens somewhere else. It's all virtual in nature, right? And as long as you have an internet connection, you can upload data and download data. That's essentially is cloud technology in very, 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 very simple terms, I would say. Then sort of even processing information became fairly easy with big data, right? Big data is one of those things where you have so much of data. If you have been in business for the last 20, 30 years, imagine the kind of data that you have, from sales data to customer data to inventory data to what has moved, what has not moved, business partners, those kind of, being able to crunch that and use that and say that this is what get the strategy even more focused has become accessible for a lot of companies now. Mobile, cloud, data, the big data. The other thing that has started to happen is that was unlike in the last 20 years is social media, right? People talk a whole lot more now, interact a whole lot more. It's so much more easier for you sitting in here to talk to some of your classmates who you may have interacted with and are now in Delhi or Bombay or even in the US or some other countries. It's that much more easier. Peer-to-peer interaction is that much more sort of scalable. So fundamentally, there have been things that have changed over a period of time, right? From sort of Manmohan Singh government to now. And when you compare that with the stable governments, and you compare that with the human capital of India, which is less than sort of say the 35 years and plus being 65, those things are very great things happening for us right here. And so if you think about all that thing and sort of look at the larger context, where are we going? I think the future is bright, but it means a lot of things need to come together. We'll leave that for a separate discussion, but going back to sort of our company right now. So we start with a view of why shouldn't technology be available for anyone to do e-commerce? So we have built essentially an out-of-the-box technology to, if you are a retailer or a distributor or a wholesaler or a manufacturer or you do B2C business or you do your customers are individuals like say Flipkart or say your shop, Rana shop, or your customers are businesses, right? So if you do B2B business to business, I hope you guys have heard about these concepts and some of the other places. There are actually farmers are using apps to understand how to harvest their crops, where they should go to sell their products. For the longest period, the headache used to be that the relationship, if I'm a farmer harvesting my crops, I used to have one or two people to sell it to. Now the entire market has opened up. So I can sell to the highest bidder out there. These are things that are happening in India, and I think it's a very exciting space to be in. I don't think there's ever been a better time to be in the world of technology and business and in India at the same time. So with that, I'll conclude. I'm happy to answer any questions that you may have. So thank you for listening to me so patiently. For the entire distribution. So I don't think offline and online or physical and online or brick and mortar and online, however you classify this space, is I would say is going to be either or. I think both have to coexist, right? It is as a customer, like going back to sort of the example that I had, as a customer, I not only want the ability to sort of go and touch and look and feel and smell the product that I want to buy, but it is also about the convenience of buying online as well. So what does online give you that offline doesn't? First of all, everything comes to your door, right? As against you going out, you don't have to park, you don't have to do this, you don't have to, talk to sort of all the sales agent who's trying to push the product in your face and all. You have your convenience, you have the ability to price compare, and one as against you. Imagine you trying to price compare in the physical world. Are you going to go to 10 different shops to actually find out what's the best price for one particular product that you know that a lot of people carry? Why would you not use online for that, right? Because you can do your comparison so easily. So there's a lot of advantage that the online medium gives that the offline doesn't, and vice versa. So I think as a customer, I want both, and I think a lot of people come from that mind space that I want both as well. Sometimes, I mean, things like Korea and some of these other advanced countries have taken things to a different level, right? I was reading this, one of my good friends from the US was from South Korea, and back in the day, like 2005 and 2007, they started installing these huge TVs on subways. Subways in the sense the metros, right? Metros and TV, this thing. Where essentially, so South Koreans and Japanese, they're like one of the most, I mean, in terms of the quality of lifestyle, they're one of the most hardest working people, right? That's debatable, but we can talk about that separately. But one of the things that sort of they have done as a company, as a country, is trying to make things easier for the citizens. So what they've done is a lot of these shops and retailers have placed huge TV screens, like interactive TV screens. This was back in 2005 and 2007, and that technology is not even here now in India, by the way. They put it by their metro screen so that people who come from home, go on their way home from work, they can stop, they can sort of see what they want, they can put like whatever they're buying, some oil and some vegetables and this and that, some meat and whatnot, put it into a basket, say, and pay right there. And by the time they get onto that metro train, and by the time they get home, that stuff that they ordered is already there. This was happening about a few years ago. And now it is like rampant, right? So this online channel is very different. It is physical plus web plus mobile plus kiosk almost. So that is what I have to say. Think about what Amazon did about 20-25 years ago in the US, right? They started off with this exact model, right? They bought a lot of stuff. They used venture capital money or their own money or whatnot to discount that. So their prices were lower than the rest of the market, the physical market, and people started buying. Over a period of time, they stopped that. Right now in the US, Amazon doesn't compete on price whatsoever. It competes on customer service. Right? So there was a deliberate strategy to price discounts so that people get the first thing that especially here in India, right? The first thing that you want to do, as Indians, all of us, we are a little price conscious, right? So it is part of our culture, right? So we want something, if it is a better price, we don't mind waiting for another couple of days or waiting for a bad customer service, but we want that product because it's a cheaper price, as long as the product everything else stays equal. So sort of that is essentially what I think these guys are doing. They're trying to capture mind share. Right? So that when the time comes for you to buy something online or you want something, you're not looking at sort of XYZ whatnot, you're looking at Amazon, Snapdeal and Flipkart. Right? So how many of you know more online or e-commerce companies outside of these three? Not a whole lot. I mean, yes, there will be a few things, Myntra and Jabong and whatever. These are the most popular. If you go to a layman, and these, I mean, we are talking about an educated, the upcoming MBA class, right? But we're talking, if you go to the outside world and talk to a layman, what is online Flipkart? So I'm doing a little market study in Belgaum for tomorrow's session, where I was talking to a bunch of retailers, and I gave them a very rapid fire sort of a thing where it was almost like a Karan Johar moment, coffee, like, giving that thing and people answering this thing. So there is a very psychological aspect of why I took that. And when I asked sort of online, the first thing that came from a lot of retailers was chore hai. Right? So it is like you get a lot of these things from various these things, right? So but it was funny to understand sort of what the market was. So the reason I'm doing that is because of that tomorrow session, which is about sort of what should tier 2 merchants like people in Belgaum should be doing. It was a good sort of case study for me to understand the market a little better. So anyway, the question is, yes, Snapdeal has $250 million is what they have incurred losses last year, but it is a deliberate strategy. It is not nobody likes to lose money. Right? And this is a strategy that has worked for certain companies in the past, and a lot of VCs and a lot of people in India think that is what is going to work here as well. It is a deliberate thing to scale or a thing. So scaling while being profitable for an early stage company is very, very difficult. And the way you do it is by throwing money at it sometimes, or there are certain ways as well. So right now what e-commerce companies are doing is throwing money at it. So they are sort of basically discounting the prices and whatnot. So because at the end of the day, everything else being equal, like I said, you want to get the cheapest product out there. And that's what is happening. So people sort of, first thing that comes to a lot of people's mind yesterday was when I said, when I was doing this market study, when I also used the word Flipkart, the first thing that I got was Sasta Hai. So it is not that. It is not going to be Sasta Hai for the rest of eternity, because otherwise that business model is doomed. Right? It doesn't work that way. The pendulum has to swing back. The question is, when is the pendulum going to swing back, and how do you make the story enough that when the pendulum swings back, people are still remembering you and still going to you. And that is not based on sort of price. People are buying it because of the service quality, people are buying it because of product availability, a bunch of things, right? So fundamentally, if you and I are competitors in the same space, now suppose you and I are both selling the same product, we are selling, say, water bottles, right? How are you and I going to compete? Number one, on product. Maybe I have 10 products as against you, so I will win the customer. Second is on price. Now suppose both are carrying 10 different products, right? But I am pricing it half than what you are. I'm going to win the customer. The third is service. If you both have the same number of products, both have the same amount of pricing. If I provide better customer service with the water bottle, I guess packaging, I give it to your house, I remember that, so that next time sort of you go to I actually come to you and say, do you want sort of another replenishment? That is good customer service, and you don't it, then I'll win the customer. So the war is going to change from sort of the price to the customer service, we think. And that's what we are providing as part of our technology as well. How do you give the ability for anybody, brick and retail retailers as well, to provide that same level of customer service that the likes of Flipkart and Amazon have? I think that is what we are trying to crack. It happened a period of times. I read this funny thing where someone actually ordered a mobile phone over Snapdeal and they got wood. Right? So it was funny that it happened in the first place. But you know what? It is a complicated, not to give any excuses to anyone, but if I were running Snapdeal, I would be furious. Right? So it is, at the end of the day, these things stick in customers' minds, right? So it is.
They don't have trust on you also.
That's correct. No, I'm not talking about trust. It is about one single episode that happened so Snapdeal makes about what? I heard this crazy stat from someone from Belgaum. I can't verify it because I don't know it for sure, but Flipkart makes 250 deliveries a day in Belgaum alone, in the city of Belgaum. Huge, right? How many of those people do you think are really complaining? It happens once in a while. There are exceptions to the rule always. But you know, these things is bad publicity to any company. So there is an aspect of, look, it was like, it's very difficult when you're looking at sort of number of, the amount of products that are warehoused, the number of products, 10,000 different sellers are on, say, these platforms. To ensure that someone, if I'm buying something and I'm saying the seller is from Ludhiana, to making sure that the Ludhiana guy is actually packaging the right material according to that order, selling that, you know, getting that all the way in, that too in 2 days or less, or one day. Sometimes people talk about one day, next day delivery and all that. Is it impossible? Absolutely not. Is it straightforward? It's not straightforward either. Can it be solved? Absolutely. Is it something that is going to be 100%? It is going to be. It is going to lead into only bad orders? I don't think so. Is it going to be? Are there going to be some bad orders or bad fulfillment for orders in the future as well? It is reasonable to expect so, I think. So it is going to be like anything, right? You may actually go to the same guy for the same service and actually come back with 2 different feedback on that particular service, right? So most people actually go and buy the same things from the same kind of people, from the same kind of businesses, right? Because over a period of time, there's an aspect of trust. But then along the way, a glitch comes along where you say, hey, he didn't supply me the right quantity, or he forgot about something, or he or she, or whatever. Right? So it is very hard to keep customer service, you know, top notch, 100% for every order on the e-commerce thing because of the scale involved. And sometimes things do happen. At the same time, as a business owner or this thing, it would be very, very, very bad publicity for something like that to happen. So the intentions are the best not for it to happen, but it does happen sometimes. And you need to be prepared to handle exception. A big example is this Flipkart's $1 billion sale or stuff like that, right? A lot of people actually bought and a lot of people actually put in orders, things didn't go through, some cancellations had to occur, people didn't get what they had really ordered for. Because how can you sell something that is 2,000 rupees for 2 rupees, right? There was an aspect of that as well. But overall, it was a little bit of a, it created that huge buzz because Flipkart's servers crashed because of the amount of people who actually came in to buy stuff, right? That was the amount of demand that they had. A great validation of what they're trying to do. But at the same time, they couldn't keep up with the demand and all these things happened. So the founders had to issue an apology. The pendulum has to swing. I don't think the business model is something that is going to be sustainable if Flipkart is going to give you 50% discount on everything. Yeah, it just doesn't work that way. So there is an aspect of why they're doing it. It's a deliberate strategy for you to buy into your mind share, right? Because chances are that if you bought something now because of the price and you've had a good experience overall, that come a few years ago, a few months or a few weeks or a few days or whatever it is, when you're about to make a next online purchase, you'll think about that experience first. That's where the mind share comes into the picture. That's the first part of the question. The second part of the question in terms of one was the price discrimination, second was the data, the privacy data, correct? So that's an important debate that a lot of people have been talking about. And India's cyber laws, I don't think are up to a mark where people can have meaningful discussions around privacy just yet. And especially because the government has, there are certain things that came out where Facebook and Twitter and some of these other social medias had actually provided a lot of data to the Indian government because they had come up with so many requests and stuff like that. So the underlying thing is about data privacy. Can data be used, your data can be used against you is the technology sophisticated enough that your data can be used against you if there is malicious intent? I think the answer is yes. Is that happening at a mass level where people need to be worried about? I don't think so. Should you exercise all the tools at your disposal to make sure that your data is protected, like using secure passwords and those kind of small little stuff, right? Making sure that you don't use simple passwords. I mean, that's a very small thing, but even like backing up your data and things like that, they'll go a long way.